Welcome to The Intelligent Investor by Benjamin Graham essay. The Intelligent Investor by Benjamin Graham stands as a timeless beacon in the world of finance and investing, its wisdom resonating across decades. Originally published in 1949, the principles articulated by Graham continue to guide investors through the ebb and flow of markets. This essay explores the enduring relevance of the book and its profound impact on the philosophy of investing. Foundations of value investing. At the core of Graham's philosophy is the distinction between investors and speculators. He articulates a vision of investors as individuals who approach the market with a focus on the intrinsic value of a stock, adopting a patient, long-term mindset. This foundational principle has not only withstood the test of time, but has become a lodestar for generations of successful investors, including the legendary Warren Buffett. Graham's concept of the margin of safety is another pillar of value investing. The idea of buying stocks at a price significantly below their intrinsic value acts as a financial seatbelt, protecting investors from the inherent volatility of the market. This principle encapsulates a profound understanding of risk and reward, fostering a disciplined approach to investment. Psychology and market fluctuations. Graham's metaphorical character, Mr. Market, serves as a poignant reminder of the emotional and often irrational nature of markets. The allegory encourages investors to view market fluctuations as opportunities rather than threats. The emphasis on emotional discipline during turbulent times remains a crucial aspect of the book's enduring legacy, offering a counterbalance to the euphoria and panic that can grip the investment community. Categories of investors. Graham's classification of investors into defensive and enterprising types introduces a nuanced understanding of risk tolerance. This categorization allows investors to tailor their strategies to their individual profiles, promoting a customized approach to wealth creation. The principles for both defensive and enterprising investors provide a flexible framework that accommodates a range of investment styles. Stock selection criteria and diversification. The detailed criteria Graham outlines for selecting stocks reflect a commitment to fundamental analysis. His emphasis on factors such as financial stability, consistent earnings, and dividend history resonates with those seeking to build a resilient portfolio. The concept of diversification, while not revolutionary, is presented with nuance, warning against over-diversification and advocating for a balance that mitigates risk without sacrificing potential returns. Investors' attitude and continuous learning. Graham's call for a realistic attitude toward the market acknowledges the unpredictability of economic forces. This realism, coupled with the encouragement of continuous learning, positions investors as informed participants rather than passive spectators. The need for perpetual adaptation to changing market conditions becomes a key takeaway, aligning with the dynamic nature of the financial landscape. In conclusion, The Intelligent Investor remains a timeless masterpiece that transcends its era. Graham's insights, from the delineation of investor types to the practical criteria for stock selection, continue to shape the philosophy of successful investors. The book is not merely a guide to financial success but a profound exploration of the psychology, discipline, and principles that underpin intelligent investing. As long as markets exist, the enduring wisdom of Benjamin Graham will illuminate the path for those seeking to navigate the complex world of finance with prudence and insight. Thank you for joining us. We hope you found the information valuable and empowering. Don't forget to like, share, and subscribe to our channel for more insightful videos on personal finance, investing, and retirement planning.